Guys, the market's crashing. Tariffs are spooking everyone. Well, Tom Lee, one of the best predictors of the stock market, is saying, hey, don't worry, ignore the noise. After April 2nd, this week, the market's going to start a V-shaped recovery, and the Mag 7 stocks are going to lead the way. In this video, we're going to talk about why that's likely to be the case. Before we get started, go ahead and smash that like and subscribe button down below. Also, be sure and download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Let's go ahead and jump into the Tom Lee video and see what he says about this V-shaped recovery. And then we will jump into why I believe he may likely be right and the best stocks to trade, as well as how to put on those option trades on the option trading platform.
So that was interesting to me, Tom Lee, as I bring you into this conversation, the head of research at Fundstrat and a CNBC contributor, because he's talking about animals in hibernation, not animals dying. It goes back to this idea of uncertainty around things like trade and tariff policy, and the fact that as of right now, in the midst of that uncertainty, perhaps companies are sitting on their hands before they start to make any kind of future investments. So if that's the situation, how much does getting some sort of certainty now frame the investment thesis for how you position yourself moving forward?
I think that's exactly what's happening now, Morgan. First, in 2018, which Michael was talking about, the spike in the VIX or the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery.
Take a look at this stock chart. This is the where we are currently today at 55.11 in the SPX, the S&P 500. And you can see this big drop that we've had over the last 4 weeks. And then you can see back earlier in the year, we had the big drop as well. So look at this chart, and now look at the chart for 2018 when tariffs were coming into play as well. So we had a big drop, and then we had a little bit of a recovery, and then a big drop, and then a big recovery. Very similar to what we've got going on right now. And I do expect, as soon as there's some clarity, just like Tom Lee says, I expect the market to move back up.
I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Rieder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high, because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
So we've got $850 billion cash on the sidelines. We've got tax reform coming. We've got interest rate cuts coming. And we already have all the bad news baked in.
So what would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla, because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this bounce, that's a bull case for Mag 7 to be the group to own in the next few months.
Be sure and watch the video at the end. It covers my Tesla option trade that I just put on.
So you like Mag 7, even though we've been talking about things like cash burn at Microsoft and all of the CapEx investments and worries about a bubble in AI spending?
Yeah, I mean, in some ways, it's been a self-amplifying downturn, right? Because we've been worried about AI as a bubble and the CoreWeave IPO at a time when we have tariff uncertainty. So I could see it as a very convenient reason why investors have actually avoided Mag 7, and it's been the group that kind of really led the downturn. But it is a cyclical trade too, because I think once investor confidence returns and they're going to start to buy stocks, the Mag 7 are not only the best companies, but they're the most liquid, and they've really derated. On top of that, I think, financials and industrials look attractive as well.
What do you think it takes to see that reversal in sentiment? And we talk so much about when sentiment gets negative enough, it becomes a contrarian buy signal. So if we're there now, then what are going to be the catalysts to start to shift that confidence again?
Well, I think the focus right now is on April 2. So I think the market has a lot of myopia around getting tariffs and tariff clarity. But we know that tariffs are just one part of the administration's goal. There is reducing regulatory cost, and then there is extending tax cuts. I think as investors start to think about that for the rest of the year, that gets them quite excited. And of course, I think we have a lot of what I would call spooled energy. Investors can't stay this bearish. The VIX can't stay this anxious. There is a lot of firepower and dry powder on the sidelines, and I think businesses can't stay cautious forever. I mean, once they know the ground rules, I think they're going to actually start making decisions.
Okay, guys, take a look at this fear and greed index. It's at 19, extreme fear. There's blood in the streets. This is when we want to be a little bit long, or I prefer to be. Let me know what you're thinking right now as well in the comments below. Are you getting long and taking advantage of this, or are you concerned about a further market downturn? Let's take a look at the three Mag 7 stocks that I'm going long in. And actually, I'm doing it with options. I'm just putting on put spreads because we've got high IVR rank of 80. So we can sell premium and take very little risk. And it's a good way to go with these stocks that are a little bit higher priced. So for Amazon, you can see the chart, and I've got the 13-day, in the green moving average, the 50-day in the yellow, the 150 in the purple, and the 200-day in the red. And you can see we broke through the 200 support. The RSI is way down at the bottom. So to me, put spread makes sense in Amazon. And you're going to see in the other two stocks that we're going to cover, it's going to be very similar, and I'm going to be doing the same thing. But 184, my target's 250. Let's go to the trade page. I'm going to open up the May. They've got earnings April 29th. So, and with expectations low and where the stock is now, I'm going to go right at the money and go 180, 170. And we can collect $3.25, so a third the width of the strike. So that's because one option contract controls 100 shares. That's $325. We hit review and send and place the trade. And we can go to curve mode, and you can see the where we're profitable. Down to 180 minus 320. So way down here at the 177 dollar mark. So we get a discount. And we're collecting $325. So we hit review and send and place the trade. And watch, we can do the same thing in Google and Meta. Again, let's take a look at the charts and see where Google comes up, but it's going to be very similar, I believe. Yep, way down, broke through support. RSI is going to be very low. I don't know why this chart's taking a while. Okay, yeah, RSI is at the very bottom. And look we've got support down here as well. So I don't know how much lower it can go, but I guess we'll find out. But again, we're going out in May. So we're going to be way past the April 2nd tariff date. But I'm going to go to the May. I'm going to go at the money. I'm going to sell the 150. So on the puts are on the right, and we're selling a put credit spread. So we're going to click on the bid to sell the 150, and then we're going to click on the ask to buy the 140. We're going to collect $3.43. So $343. Our max loss is the $10 width minus the 340 collected, so 660. We hit review and send, place the trade. You can see again the profit zone. We can even move down a little from here, although we just had a huge move down. So that's what we do there. So that's Amazon, Google. Last one, Meta. Same situation here, guys. All these Mag 7 stocks have really been hammered. So we're looking, let's see where we're at here. It's going to be similar chart. 563. You can see my target, 730. We broke through support, 200 day. This is when, we want to be long, blood in the streets. And again, fundamentals on all these stocks are unbelievable. But these guys are going to lead the rebound, the V-shaped recovery that Tom Lee's talking about. Let's go to May. So we open up the option chain. We're on the Tasty Trade platform. There's a link down below. But trade page, high IV rank of 62. We're at 563. Let's go out to May, and then let's go out the money here. 560 we will sell, and we will buy the 550 right here. And we collect $375. We hit review and send and place the trade. Again, curve mode. You can see that profit zone. All right, guys, remember to hit those like and subscribe buttons down below. Download the free options workshop. Leave a comment. Ask a question. Let me know, are you trading the MAG 7 stocks right now, and which ones? Thanks for watching. I'll see you in the next video.